Good morning and welcome to the market forecast. Looks like I'm going live here. It looks like we're good to go. So happy to have you here. Again, welcome to the market forecast. It is Thursday, September the 10th. I'm John Hoagland. Thanks for trusting me with your time. As always, we're going to look at our six main markets, the crude oil, gold, NASDAQ, mini S&Ps, Euro, and the Japanese yen in context through the lens of risk management, always. If you are in the markets already, the market's already kind of moving a little bit with the economic information that came out this morning. We're going to take a look at those very shortly. But speaking of that economic information, the ECB has left interest rates unchanged at zero. I don't know what they're going to do about it. But as far as the jobless claims number is at 7:30 a.m. Central this morning, the initial jobless claims we were looking for a little lower of 846,000. It came out a little higher at 884,000. There was also a revision from last week that is also a little bit higher than they had originally thought. The continuing jobless claims, 12,925,000, was what they were expecting. A little higher than that, 13,385. Doesn't seem to be affecting the markets negatively here just yet. And the PPI number came out this morning. They were looking for 0.2%. Came out 0.3%. So we've got a little digesting and a little conflicting information in the economic numbers this morning. We are still waiting for 9:30 today. The nat gas numbers due out, and we are still waiting, of course, for the EIA crude storage numbers due out. The API last night announced a 2.9 million barrel boost in crude oil, and I think they're looking for a little bit of a drop in crude oil according to the EIA. We will have to see. As far as other news is concerned, jobless claims numbers are again worse than expected, and including revisions from last week. U.S. equities initially looking like they were going to be opening steady to lower, look like they're going to be looking perhaps to open a little bit higher. But things may have changed in the last couple of minutes since the last I looked. So, we'll take a look at that shortly. The ECB leaves rates unchanged, although changing some of the discussion about inflation and possibly curbing the euro, which is at 2-year highs against the dollar, from getting too much higher. So, be interesting to see what happens there. As far as the stimulus, investors will be eyeing the vote in the Senate today. They're going to see if they can pass kind of a trimmed down version of the stimulus package. And interesting thing here, Chinese regulators have limited speculative trading in the Chinese markets. The Chinese index, Chinext, was down 10% so far this month. I don't understand why they would do something like that. I mean, I don't know. We'll investigate that, and we'll see if we can find out more about that. Don't forget to like, share, comment, question, feedback, and heckling are always welcome. Don't forget, of course, to subscribe to our YouTube channel so you can get notifications when we do go live. I always like to check the VIX and the dollar index before we get into the markets here. The VIX and the dollar index both down a little bit. VIX, last I checked, 28.60, and the dollar index down a little bit at 92.90 now. Of course, that may have changed. I'd like to say good morning to everybody. MSS Capital, first one in the room. You win the prize. Good morning to you. Good morning, Felix. Good morning, Maximus from Vancouver Island. Tanya, good morning. Felix, reporting from Santiago, Chile. Welcome. And Maximus, you guys are having a little conversation here. That's all right. That's a good thing. Level 2, thanks for that webinar yesterday. I needed that. Well, good. I hope that, in some way there's something you can take along with you, all of you, to help you improve your performance. Absolutely. Fanis, good morning, Christopher. Good morning. Russian name I can't, I'm going to call you Anthony. Anthony, that's what I'm going to call you because I'm not quite sure how to pronounce your name, and I apologize. Level 2, finally got the 3380 level webinar. Helped me a lot. Hold on to those positions. Oh, well, good. I'm glad. See? Already, it is helped. Excellent. Subconscious, Marcus, good morning. Alan, Rob, Keith, Esteban, Troy, Felix. You guys still chatting? All right. Level 2, Sarah, good morning. Huh. Notice the new white hair just above the, maybe over here or over here. Yes. Um, I am a year older, that is for sure. Andrew, no broken rules. No more broken rules. Excellent. Excellent. Good morning, John V. Tanya, Son of Wisdom. Vast West, Doyle. Sarah, did you have a fun day yesterday? I did. I went to the office, which is downtown. Haven't been there in a while. Saw some of my coworkers, which was really a pleasure. My daughter's birthday happened to be yesterday as well. Yes, my daughter was born on my birthday. Her name is Sarah, and she came and had lunch with me for our birthdays. We're going to probably do something else again over the weekend, but I had a very nice day. I got to see some of my coworkers who I dearly love. Everybody in this company has traders in at the top of their heart and the top of their minds, and it's really just fun to just be with them in the same room and to be able to hang out together and to be able to chat. So it was great. All right, Toastman. Oh, happy 40th. Oh, thank you. You're very generous. People in the office thought I was in my 40s too. I'm actually only 20. They've been 20 hard years. No, just kidding. Anthony, you are the real Anthony. All right, well, we'll call him Antonio. That's it. He's going to be Antonio. And I hope it doesn't bother him. Esteban, they like to prevent bubbles in the markets. I'm pretty sure you're talking about the Chinese. John V, thank you very much. Good morning, my brother Rick. Good morning, Michael. All right, it's Thursday. It is rollover. Rollover for our equities, rollover for our currency markets. If you check the volume this morning, the volume is still in the September contract. I'm going to be using the September charts, and I will be trading the September contracts today. Tomorrow, you should be able, or even perhaps by the end of the day, you're going to see that the December contract is going to have more volume. So tomorrow morning, I'm going to change all my charts over, and I'm going to be trading December tomorrow. But so far this morning, the volume is greater still in the September in the currencies and in the equities. So we're going to be looking, as a warning, we're going to be looking at the September contract. So why don't we go ahead and jump in now? This does not necessarily affect the crude oil. It's in the October contract. So let's take a look here at the daily chart. Now, we've seen a pretty good pullback here on some pretty decent volume. Looking at the open interest that occurred last night, we added 21,000 contracts in crude oil and open interest. Now, what is it? Today is the 10th, so we're actually starting to come into the front edge of rollover, but I'm still kind of impressed by the number of contracts that were added yesterday off of those lows. Volume was a little bit off yesterday, which kind of also tells me that our downside auction, which has been very straight and full of momentum, may be losing some of that momentum. As far as today is concerned, we've got an inside day in extended trading hours. The EIA is expecting a 1.3 million barrel draw. The API announced a 2.9 million barrel boost. And if you ask me, these numbers rarely affect the market in a way that it is expected or reasonable, it seems. So trade what you see. Again, the downside momentum seems to be slowing up. We added 21,000 in open interest, and that's a big number that may be starting to be rollover related, of course. Remember, anything can happen. It is the EIA day, so try and stay patient. And looking at the 30-minute chart here, it gives us that opportunity, I think, to try and stay patient, because the market is inside of yesterday's range and even inside of yesterday's area of value that tells me, okay, then I'm probably going to be able to find better trade locations as the day goes on. So this is going to probably keep me from being involved in this market um, until after the EIA number comes out and some of that dust settles. Not able to really see if our opening range trade is working for us here in crude oil, but we do have some slight overnight short inventory here. So it is, something that is a distinct possibility early in the session. If we get a little too short in short time frame, our overnight weaker hands traders, we may bring price back up to settlement, but it doesn't change the fact that we're still inside value and inside range from yesterday. So that again gives me the opportunity, I think, to try and stay patient and look for better trade locations as the day goes on. Again, EIA 10 o'clock today Central, not 9:30 Central, 10 o'clock today because of the holiday on Monday. So I'm going to be kind of focusing on possibly some other opportunities in some of the other markets here, perhaps even including the E-mini S&P. So again, it is rollover day. Tomorrow we will be trading the December contract. Volume and open interest is always a little blurry during rollover. We have the bars down here, but seeing that we had less volume yesterday, a lot of that volume has already moved over into the December contract. So it's a little bit difficult to see on these charts where volume truly is. We lost 10,000 in open interest, again, quite possibly a function of rollover. So the week of rollover, even sometimes the 2 weeks of rollover in the equities, usually creates issues similar to what we're dealing with now. Now, yesterday we had a really sweet early, overnight opportunity to look for a long near a weekly kickoff low here at 3,300. That is now long gone. We are back wrestling with this 33.9650, the previous all-time high in this November contract. So, while the market was looking a little bit lower earlier, we're seeing some movement to the upside after our numbers this morning. And I'm going to remind everybody that headline risk is a distinct possibility just about any day, but I think with the Senate voting on the stimulus package, there may be a higher degree of risk of headline news. So make sure you keep your ears and eyes on the news. Subconscious, I'm seeing your question right here. Does volatility increase during rollover? It really depends. Crude oil rolls every month, and crude oil, the rollover is usually about 1 week long. And during that period of time, there's a lot of longer term traders that are working more diligently on getting a cheap rollover. In other words, moving their positions from the front months to future months than they are in becoming directional. So quite often you're going to see more range bound activity during rollover. Yes, CL is a range roll normally. Yes, it does tend to keep the directional activity focused more on getting a cheap rollover. And by getting a cheap rollover, I mean, if you're going to work the spread and you need to buy the spread, you want to buy the spread on the bid if you've got 10,000 contracts with which to roll over, because you're going to save yourself $100,000 by doing it that way. And that's just one way to roll. You can leg yourself into future positions as well, which is a little bit more dangerous. So it takes a lot of concentration for some of these larger traders to achieve their goal of a cheap rollover. Okay, so back to the E-mini S&P. No real overnight inventory, no gaps, inside day, inside range. We're seeing some momentum to the upside here, but again, opening in range and in value tells me that I'm probably going to be able to be patient and wait for better trade locations sometime after the open, maybe after that first half hour or hour of trade. So let some of this information play its way out I'll watch, of course, the opening range to see if there's an opportunity during, at, or in the opening range. But because we're opening in range and value, there's a little bit less of a probability of the opening range actually playing out. That said, watch it happen today. But again, because we're in range and in value, we don't really have any overnight inventory. There's some digestion going on from the news that came out this morning. I'm going to try and stay patient. And it's kind of similar here in the NASDAQ, although the NASDAQ had a pretty big boost in open interest off that low of 11,000, the weekly kickoff low yesterday. It added 23,000. So they're both in rollover. We lost 11,000 or 10,000 in the mini S&Ps. We gained 23,000 in the NASDAQ. There's some sort of a disconnect there. And I believe that it is 100% rollover related. We did pull off that low there, that weekly kickoff low in both of these products, pretty strong. Volume again is blurry because of rollover, but that weekly kickoff, big fat round number of 11,000 certainly was supportive for us yesterday. So now we're up against a previous weekly kickoff level here. Is it going to be resistant or isn't? Isn't it? Well, it is a distinct possibility in the longer time frame. What's above that? Well, if we can get above that, then it would make sense for us to go up and test the other side of this trend line that's been with us here since pretty much May. Take a look at the 30 here. Okay. No real overnight inventory, perhaps maybe getting a little bit long here before the open, but we are at possible risk of creating a slight gap. Well, that slight gap gives us an opportunity. If we can't close the gap early, then I'll look for a test of this previous weekly kickoff level up here, okay? I think it was 116.30, 11,630, 11,630. Boy, that was hard to say this morning. All right, so again, if we open with this gap in the NASDAQ and we cannot close this gap relatively early, my next stop would probably be looking for an opportunity up there. You can trade the December contract today, Joshua. You're not going to be punished. You may just have a little bit less liquidity and perhaps a little bit less volume, but it will change throughout the day. By the end of the day today, Joshua, I'm thinking December will probably have more volume and more liquidity. Just starting my day off in the September, I'm going to switch to December tomorrow. But you are fine if you're already trading December, just so you're aware. So again, watch the gap here in the NASDAQ. Take a look now here into the gold. Everybody loves the gold. So we've kind of taken the shrinking off of this market. I took this trend line off because we kind of looked below it. We've rejected below it now, but it's more of a pennant formation. Wouldn't you agree? We've got lower highs. We've got pretty even lows here. And we're taking a look back above this trend line here. So this trend line may go by the wayside as well. If we accept above it, it's no longer going to be any good to us. So, we had a pretty decent opportunity, relatively close to weekly kickoff low yesterday to see some buying coming in. We did add 8,200 in open interest off that low. Not very impressive as far as volume is concerned, however. We're going to see how the volume looks today if we can break out and hold above this trend line. Okay, this trend line, currently we're holding above it. Let's take a look at the 30-minute. This market's been open for a little while. There was no real true gap here on the open. It left there pretty quickly. There's only one or two tick overlap in regular trading session over regular trading session. So I'm viewing this as a rejection of yesterday's price and range and value. We're one time framing higher. In other words, we have higher lows and higher highs on consecutive 30-minute bars. I don't want to step in front of this at this time. I think we're holding above that trend line. If I get an opportunity to look back at that trend line in short time frame, it might be an opportunity for us to look for a long. But as long as we can continue one time framing higher, continue pushing higher, I don't certainly want to fight this move. The knee-jerk reaction to the upside after the numbers came out, I think, is indicative of a possible new interest in this market. Again, we did add 8,200 in open interest on this day, which really kind of looks like a short covering day, but we added open interest. So not only did we have some short covering yesterday, we had some overall buying coming in this market, interested in continuing this market to the upside. So that said, it's going to be hard. Directional markets try and keep you out. It's at least that's the way it seems. When you see a directional market, you always are trying to buy a deep pullback, and then the deep pullback it never gives it to you. When you do get the pullback, maybe that's the one that should have been deep. But I'm not interested in necessarily selling into this without some sort of structure in the day time frame. There's always things that we can look for in the back behind us here. We do have a naked point of control all the way up here at about 1980, which would be an interesting opportunity for us to either take a profit or look for some sort of structure today to look for a move in the opposite direction. But I do not want to fight a directional move, and this is what that is right now. So if you're not in it, look for a pullback to get into it, or be patient, look for some structure to lean on to manage your risk if you're going to look to short it. Okay, the euro. It is also in rollover. It is largely holding channel extremes. We took a look below it for the last couple of days here, but we have not accepted, and now we've rejected that move to the downside. Decent volume kind of holding up, but we did lose open interest yesterday. We lost about 4,300, and that's the preliminary. That's the estimated number. It's likely to change a little bit, but we do expect that we did lose some open interest. So if that open interest was to the upside, I'm thinking we took out some shorts yesterday. So we got some shorts here, a little bit nervous. They covered some of those shorts. Now we're seeing the market continue to the upside. The ECB change or lack of change in rates, I'm sure, has an effect on what's going on in this market. But when you look at the longer time frame, we are respecting the channels, and we are probably more likely in short time frame control than longer time frame control. We have this previous weekly kickoff level 1893, which is currently in play now. It doesn't seem to be having much influence in the past. So what I'm going to do is I'm going to remove this from my site because I don't believe that it is necessarily going to be all that useful for us today. So the euro did open with a gap, a slight gap, albeit, but a gap nonetheless, and the market does continue to be one time framing to the upside. So again, I don't want to fight this move. I can look for opportunities of targets in the past. There's probably a little demand zone we're getting pretty close to here. We've got a naked point of control up here with which to look for a possible opportunity for a profit target, maybe even perhaps an entry in the opposite direction. But again, I just want to caution, when a market is directional, when it gets an attitude like this, don't fight with it. Don't fight with it. And it is rollover, so these directional moves are a lot less likely, and it's going to take a lot more energy for them to continue. So just keep that in mind as the day goes on. There's going to be some opportunity here, I believe, in the euro, the gold, and even in the Japanese yen, if we are patient enough to hang with the fact that we may miss something, but we may find something better as the day goes on. Yes, that's what they are doing too, is they're just trying to talk the euro down. I like the way you call that, jawbone the euro down. So we continue to shrink here in the Japanese yen. A little bit of a ray of sunshine for possible bigger opportunities in the near future, as we had a pretty big boost in open interest last night. It is again in rollover. We're centrally located between weekly kickoff high and weekly kickoff low. We continue to try and coil and build energy. That increase in open interest yesterday may be building some of the energy, but I'm not too sure that it's anything important is going to happen today. But it will heighten my radar of the Japanese yen for opportunities coming in the future. Short time frame control. Let's take a look here. So settlement is here, 94.16. We do have some overnight longs. We had somewhat of a push after the open to continue this move to the upside, but where did it go to? Basically, it traded right to the day before yesterday's point of control target. When we open between 2 points of control, then when there's a gap between them, especially, the market tends to try to trade to both points of control because it's just seeking to see if there's any business left to do, because those points of control are the most popular prices of these days. When we open between them, especially when we open in a gap between them, the tendency tends to be, well, let's go see if there's any business left to do up here at this point of control, and then if we don't see new business up there, let's take a look and see what we see down at the point of control from yesterday, which we've already been to in the overnight session, but not in the regular trading hour session. So I'm kind of looking for this to be a bit of a repair day. And a repair day is, there's a gap between the day before yesterday and yesterday. That gap is, of course, now filled in regular trading hour session. But then we tend to try and go see if there's any business left in either one of those ranges. And that just means a move back to point of control. Okay. Boy, holy cow, that was long. I am sorry. I didn't realize that I was yammering for so long. We got our equities ready to open up here. I'm just going to see what's going on here. Some of the comments I was able to catch in flight there. But I'm going to let everybody get down to work here. I didn't realize that I had been talking for so long. Let's get down to work. Trade well today. Take your time. Be patient. If you miss a trade, don't worry. There's another one coming. Trade what you see. December contract or September contract is fine in the currencies or in the S&Ps. I chose to stay with September, but tomorrow I'll be certainly on December, as the volume is surely going to roll in a large percent of it today. Let's just take our deep breath and get down to business. I hope you do this with me. It always makes me feel better. Get out there and profit today. Trade well. We'll see you at 3 o'clock for the market recap with Dan the Man Hodgman. And I look forward to seeing you back here tomorrow morning. I hope you trade well today. Get out there and profit.